Hello, and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is October 8th, 2025, and we are diving deep into one of the most talked-about stocks on the planet, Meta Platforms, ticker symbol Meta. We'll start by breaking down the flurry of recent news and analyst sentiment, and then we'll jump into the charts to see what the price action is telling us. There is a lot of conflicting information out there, with both extremely bullish and cautious narratives circulating, so let's try to make sense of it all. First, let's talk about the news, because the fundamental story for Meta is incredibly strong right now according to most analysts. We're seeing a surge in confidence driven by Meta's powerful advancements in AI advertising tools. This has led to some very bullish price targets, with some desks calling for a move to $900. This optimism is backed by stellar Q2 financial performance, where Meta reported a 22% year-over-year revenue increase and a massive 38% growth in earnings per share. The narrative has completely shifted from just a year or two ago, with the focus now squarely on how big Meta's AI-driven growth can become. Even Norges Bank, the world's largest sovereign wealth fund, has been increasing its position, which is a significant vote of confidence from institutional money. However, it's not all clear skies for Meta. There are some significant bearish points to consider. The Reality Labs division, responsible for the Metaverse, is projected to lose a staggering $20 billion this year. This level of cash burn is a persistent concern for some investors. Additionally, Meta is facing fresh scrutiny from lawmakers over its new generative AI chatbots and potential threats to younger users. And just this past Monday, on October 6th, the stock took a more than 2% hit. Reports cited investor concerns over OpenAI's new social media competitor, Sora, as a key reason for the dip, highlighting the ever-present competitive risks. Now, let's bring up the daily chart to see how this news translates into price action. Looking at the bigger picture, Meta has been in a powerful uptrend for most of the year. The stock surged from the high $400s back in May to an all-time high of $796.25 on August 15th. That was a truly impressive run. Following that peak, we saw a healthy and expected pullback through late August and into September, where the price found a bottom. Since then, the stock has been grinding its way back up, showing resilience. The key question now is whether this is a consolidation before the next leg up, or if the rally is losing steam. Let's zoom in on the last couple of months to really highlight these key levels. As you can see, the all-time high near $796 is the ultimate resistance level to watch on the upside. Any long-term bull wants to see a confident break above that price. On the support side, the recent drop on October 6th is very significant. The price found a bottom right around the $690 mark before bouncing. This makes $690 a critical short-term support level. If we lose that, we could see a deeper correction. Looking slightly higher, the area between $720 and $735 acted as support during the September pullback, but now it's acting as a band of resistance that the price is struggling to overcome. So, the current battle is being fought between the $690 support and the $720 to $735 resistance. Let's switch over to the 1-hour chart to get a better look at this recent price action. Here you can clearly see the sharp sell-off that occurred at the start of the week. That move was fast and aggressive, directly correlating with the negative headlines about competition and Metaverse spending. Since that low at $690.51 was established, the price has been attempting a recovery. However, you can see that the bounces have been met with selling pressure, particularly around the $715 to $718 area. This shows indecision in the market. Traders are weighing the strong fundamental AI story against the recent negative news flow and technical resistance. We are currently in a tight consolidation range, waiting for the next catalyst. Drilling down even further to the 15-minute chart gives us a view of the intraday battle. For day traders, the action is choppy. We can see a minor support level forming around $710, which has been tested multiple times in the last day. The upside is capped by that $715 to $718 zone we saw on the hourly chart. A break above $718 on good volume could signal short-term bullish momentum, while a failure to hold $710 could see us retest the lows from earlier in the week. This short-term time frame is all about watching for a decisive break of this narrow range. Okay, let's switch back to the daily chart and recap what we've learned to form some unbiased predictions. The big event on everyone's calendar is the Q3 earnings report on October 29th. This will likely be the catalyst that breaks the stock out of its current range, one way or another. So, let's outline the scenarios. The bullish case, which I'd give a 70% probability given the strong analyst sentiment and AI momentum, is that the stock holds above the $690 support level leading into earnings. A positive report that meets or beats the high expectations could easily send the price surging through the $735 resistance. If that happens, a retest of the all-time high at $796 is very much in play before year-end. Reinforcing this would be any positive pre-earnings announcements or upgrades from major firms. The bearish case, with a 30% probability, would be triggered by a decisive break below the critical $690 support level. This could happen if broader market weakness sets in, or if negative news surrounding Meta's spending or regulatory issues intensifies before the earnings call. A disappointing earnings report could then accelerate a move down, with the next major support zone not appearing until around the $650 to $660 area from back in February and March. So, to summarize the key price levels to watch, on the upside, look for a break of $735, then the all-time high near $796. On the downside, the crucial line in the sand is the recent low at $690. The market is telling us a big move is coming, likely driven by that October 29th earnings report. Thank you for tuning in to Explain the Charts. We hope this analysis helps you navigate the markets. Please remember, this video is for informational purposes only and is not financial advice. You should always conduct your own research and consult with a professional before making any investment decisions. Trade smart, and we'll see you in the next video.